Welcome everyone to the Vested Interest channel. This is Shane back for a stock of the day video. I did miss yesterday. Again, my daughter is in the middle of volleyball season, so every now and again I'm going to have to miss. I actually may miss tomorrow too. She has a game tomorrow. I just don't know the exact time. If it's after 5, probably will be all right. But if it's around 4, 4:30 like the last couple have been, then I'll probably have to leave right from work there. And then by the time I get home, it's 6 o'clock or later, and I just want to relax, if I'm being completely honest. But I am back for today, so we're going to take a look at Domino's. This is out of the consumer discretionary sector. I'm actually surprised I have not done this a little sooner. Now, this is the vested interest stock screener. This is the criteria we will be going through in this video. It must meet 5 of 8 to make it onto my watch list. And keep in mind, this is just an initial screener. It is something that I look at. Thousands of companies out there. Just gives me a quick check on a company to see if I want to do more of a deep dive into the financials, looking at their balance sheet, their income statement, their debt to equity ratios, their margins, are they expanding, their revenue, lots of good information in their balance sheet that you should be looking at. And then I do a discounted cash flow analysis on those that I'm really interested that pass the second, not screener, but the second criteria that I've set up. If they meet that criteria and this screener, then I'll do a discounted cash flow analysis on it. So we're going to run this through the screener, see if it makes sense on my watch list. Let's get rolling. And back to Domino's, you can check them out on their homepage, www.dominos.com. That's www.dominos.com. That is their homepage where I pulled this information from. And they are a pizza company, right? They make the pizza and some other things that you can buy from them, soft drinks as well, breadsticks, chicken wings, that sort of things. I think they have some pastas on their menu. You can go to their menu and check them out. That's what this is here, their homepage. If you wanted to order something to bring home for dinner, Domino's Pizza might be one that you go to. All about pizza domination. That's what they're really about. From humble beginnings as a single pizza restaurant in 1960, Domino's has become today's recognized world leader in pizza delivery. At Domino's, we are all about pizza, and from the day our doors opened, we have dedicated ourselves to making and delivering delicious food with high-quality ingredients. Beyond pioneering the concept of efficiently delivering our made-to-order pizzas, we have been part of the innovations that have made a significant impact on the entire food delivery industry. Domino's pioneered and patented insulating bags to keep pizzas, I did not know that, oven hot during normal delivery. Domino's created the sturdy corrugated pizza box. Didn't know that either. Domino's invented the 3D car top sign, which is currently used by a variety of industries, including taxis and driving schools. And you can read the rest of this, but again, they are, one of the industry leaders in pizza delivery. Whether you're going to one of the locations, or I think most people have stuff delivered to their homes anymore, but they do have some stores if you want to go sit down in a restaurant as well. But that's what they are about, right? You probably are well aware of Domino's. You probably have ordered pizza from them in the past, or had pizza from them in the past. Now, the reason we're taking a look at them, down 0.72% on the day. Not a huge drop, but a drop nonetheless. We are talking about Domino's Pizza, ticker DPZ, out of the consumer discretionary sector. Closed out the day at $419.88. Looks like they were up slightly in the after hours, at least when I pulled this up. After hours goes towards 8, so they could do anything from here. 52-week range as low as $397.12, as high as $500.55. They are within 15% of a 52-week low. Hold on one second here. I thought I did the math on that. Let me see if I can pull that up real quick. 569. Well, let's just do the math. I believe it's 569, but it's 397.12 times 1.15 equals, it's $456. So under $456.68 puts them within 15% of a 52-week low. So they are there currently. Market cap of $14.186 billion, a beta of 1.12. So they are more volatile than the overall market, just slightly. Maybe you can use that volatility to your advantage, buying whenever they have big pullbacks, and then holding whenever they have those run-ups, or selling if you're looking to take profits. PE ratio, price earnings ratio, at $24.51 per share seems a little elevated for a company like this, so they need to be growing their earnings relatively quickly to justify that. Earnings per share, EPS, $17.13 per share. Earnings date, October 14th. We are past that, so you should go check out their earnings if you are interested in that. I'm sure they have that on their homepage. Forward dividend is $6.96 per share per year. So divide by 4, though we will see what their quarterly payout is towards the end of the video. Current dividend yield of 1.65%. Ex-dividend date, December 15th. Looks like they're going to pay out on December 26th. So if you were to buy them now, you would get the next dividend, but you want to be buying before the ex-dividend date, right? Don't wait till December 15th. You want to be buying at least on the 14th or before. 1-year target estimate, at least according to Yahoo Finance, $500.03. So they do see them, well, not quite getting back to their 52-week high, but pretty close, 558 or 555 cents. So 52 cents off their 52-week high, at least according to Yahoo Finance, where I pulled this information from. Not affiliated with Yahoo Finance, just one of the sources I go to for information. Jumping over to the right, I like to look at dividend yield theory as an initial, just quick check to see if the company is potentially undervalued. To do that, we look at their 5-year dividend yield average, 1.12%. We compare that to their current, 1.65%. Over here forward, 1.65%, same number. Since it is higher than their 5-year average, that speaks to potential undervaluation, at least according to dividend yield theory. Payout ratio, I like under 75%. They're at 39.33%. We talked about the ex-dividend date and the dividend payout here. Free cash flow, I like growing free cash flow over time because companies can do some things with that free cash flow. They can pay down debt, make acquisitions, reinvest back into the company, pay dividends, which this company does, raise those dividends over time, which is what I want as a dividend growth investor, buy back shares, even keep some of that cash on the balance sheet as cash or cash equivalents. Now, looking at their free cash flow, you can see here going back to December 2021, $560 million. 2022 looks like a drop down to $388 million. 2023 up to $485 million. 2024 up to $512 million. Trailing 12 months, which keep in mind does include part of 2024. We are in October, late October, but it still is going to represent, November and December of 2024 at least, and part of December or part of October still. $613 million. So it does look like, depending on where they shake out at the end of 2025, they've had growing free cash flow. I'm not going to give them the check on this because they had the one down year in 2021 and we're not quite done with 2025. But like I said, if they close out 2025 with growing free cash flow up from the $512 million last year, then that would give them the 4 years I'm looking for of continual free cash flow growth. Repurchase of shares, they are pulling shares out of the market. 2021, $1.3 billion. It was a good year in 2021, it looks like. 2022, down to $293 million. 2023, $269 million. 2024, $329 million. Trailing 12 months looks like they're continuing that trend, but keep in mind, this does include part of 2024 numbers. So until we get the end of 2025 shaken out, we don't know how much of this $507 million is still 2024 numbers, but it definitely looks like they are still purchasing shares in 2025 because that is higher than anything they did in 2024. All right, jumping over to stockanalysis.com. This is another source I go to for information. I do recommend 2, if not 3 sources. Don't just blindly follow one source. Make sure you're looking at a couple just to make sure your information is accurate, up to date. If you got any discrepancies between the information, I'd go to a second or third source. That's just my opinion. You take it for what it's worth. You don't have to use stockanalysis.com or Yahoo Finance. There's plenty of other sources out there. I just would not be blindly following just one source. Sometimes information is wrong. Sometimes it's outdated. It happens. But they do have 22 analysts over at stockanalysis.com that are taking a look at this. They do call it a consensus buy. Now, keep in mind right here, this would be a strong buy. This would be a buy, a hold, a sell, and a strong sell. If you went to the website, you could see how many of these 22 analysts fall in each category. It is pretty close to a hold. So obviously, some of them may be calling it a hold or a sell or even a strong sell. But overall, the majority, it falls in the buy category. Low estimate of $340. It would need to drop 19.02%. To get down to that lowest estimate there. Average estimate of $487.64. That would represent a 16.14% increase, not too far off the 500 we saw from Yahoo Finance there on the previous page. High estimate of $574. That would represent a potential 36.71% increase, and you could collect that 1.6% dividend yield along the way if you were to buy them now and lock that in. Now, I like to look at some statistics as part of the initial screener. Return on capital employed and EPS growth. For return on capital employed, I like above 10%, and this is the highest I think I've ever seen, 83.23%. Pretty impressive for a company that is selling pizzas. Earnings per share EPS growth, I like above 5%. They're at 7.79. And revenue growth, I like to throw in. It's really more part of a deeper dive that I do, looking at revenue margins, their balance sheet, their income statement, things like that. This is more part of that deep dive, but I throw it in because it's right by EPS, so why not? And it's forecasted to grow at 5.57%. All right, jumping over to their dividend history here. Quarterly payer, I think I might have mentioned that. If not, they are a quarterly payer. Payout ratio 40.64. So this would be one of those discrepancies. I think Yahoo Finance had them around 39%, which is not too far off at 40.64%. But still, there is a discrepancy. So you might look for a third source and to see which one is accurate. But either way, it's under the 75% that I'm looking for. Their dividend growth in double digits, 15.23%. 11 years of growth. Buyback yield is positive 2.04%. Just means whenever they are buying back shares, they are pulling more shares out of the market than they're issuing. Shareholder yield positive at 3.7%. They do pay out like most companies on the March, June, September, December timeframe. Going back to June 14th, 2023, they were paying $1.21. Raised it up March 14th, 2024, up to $1.51. Raised it up March 14th, 2025, up to $1.74. And I would anticipate if they are going to continue the dividend raises, it will be March of 2026 before you see the next one. All right, let's run it through the screener. Understand the business. Yes, they sell pizza. I mean, Domino's Pizza, unless you've lived under a rock or maybe are an alien from another planet, you probably are well aware of Domino's Pizza, what they do. They're a pizza delivery, pizza maker, retailer that sells pizza and other foods and drinks there. Like I said, they either for delivery or at one of their locations. They still do have some brick and mortar stores. Growing free cash flow. I would almost give them a check here, but they did have the 1 year back in 2021 to 2022. There was the down year. Now they've been on the uptrend since then, and depending on how 2025 numbers shake out over Q4, it does look like they've had 4 quarters or 4 years of free cash flow growth, but I'm not going to give it to them until 2025 is over. So no check there. Growing dividend, yes, double-digit growth. Dividend payout ratio is right around 40%, 39% right in there. Dividend yield theory says they're potentially undervalued, so check there. It is within 15% of a 52-week low, so check there. Return on capital employed, over 80%. Definitely a check there. Earnings per share growth was at 5%. Check there. Like I said, if you wanted to give them growing free cash flow, that would be an 8 out of 8. I'm going to give them 7 out of 8. Either way, it puts them on my watch list. They might be one that I do a deep dive on. Like I said, that return on capital employed is very impressive, and that is one of the metrics that I like to look at, even in part of my deep dives. That return on capital employed is an important metric, in my opinion, not only part of the initial screener, but part of a deeper dive. Let me know what you think of Domino's Pizza in the comment section down below. Do you order their pizzas? Are you bringing Domino's home to the family, or is it one in your portfolio? Is it one maybe you are selling? Maybe that's the reason for the downturn today. If so, let me know what the reason for that sell was. All right, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Domino's Pizza you'd like me to cover in the Stock Pick of the Day series, drop it in the comment section. I will work it into the rotation on the day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research and invest based on your situation, circumstances, and select criteria, or see the advice counsel, a certified financial advisor.